income rule, the one where you've borrowed money and you're going to make a profit. And this is a typical example we see all the time. Let's say your IRA buys a property for $150,000 and it puts down 20% or $30,000. Well, if it put down 20%, that means 80% of the purchase price was leveraged, and that means 80% of the profits are going to be subject to taxes. Now let's say that the monthly payments on this thing are $850 a year before taxes and insurance. And furthermore, let's say that this thing appreciates by 7% annually, so that after 2 years, the IRA can sell the property for $172,000. On a simple level of understanding, your IRA just made $22,000 profit. But remember, we've got to pay taxes on that portion that was leveraged. In this case, that was 80%. But you know what? Let's walk through an example making the assumption it was 100% leveraged. So once again, let's forget that we had 80% leverage. Let's just run it through saying it was 100% leverage just to dramatize how this whole rule hardly makes any sense. So we start off with $22,000 profit. Now remember, we're allowed to take the depreciation deductions. In fact, there's probably more write-offs due to interest and other stuff on here as well, but let's just keep it simple and say there is $10,000 of depreciation. Now we subtract the $10,000 from the $22,000 profit. We're left with a $12,000 gain. The $12,000 gain is going to be taxed at 15%. So now the IRA is going to have to pay $1,800 in taxes. $22,000 minus $1,800, that's $20,200 left of hard, cold cash. What was the initial cash outlay for this property? $30,000. What did I get in return? $20,200. What was my rate of return on that investment? 67%. 67%. And guys, other big benefit here. With this property, if you bought this property and it was a property off on the road, whenever you drove to work, you went by this house each and every day, and you saw the deadbeats weren't taking care of the property properly, that it's a rental property, what could you do? You can start the foreclosure, the eviction process. You can kick the bums out, basically. Alternatively, if you place money with a mutual fund manager, and the mutual fund manager places the money with Enron, and you see Enron's not taking care of their corporation the way they should, how much control do you have over your investment? Absolutely none. What we're talking about with these self-directed IRAs is giving you control. Giving you control so that you can watch your investments closer and make sure they're actually going to pay off the amount that you want and the amount that you need so that you can retire comfortably. Let's do another example. A lot of people are using options on real estate to dramatically increase the amount of wealth they have inside of their retirement plan accounts. And let me just give you an example. Let's say that you open up a Roth IRA and you put $3,000 inside of that Roth IRA account. Then the next day, your buddy Dan comes up to you, and Dan starts bragging about how he bought a property for $185,000, and he thinks he's going to be able to do some just basic fix-ups and be able to sell the property for $200,000. Now, is that a whole cottage industry out there right now? Yeah, sure it is. So Dan's going to be happy with making a $15,000 profit on this thing. Now, maybe you know there's going to be a new shopping mall coming in across the street, or the city's going to condemn and overpay for the property. I don't know what. But maybe you think the property is going to go for a lot more than $200,000. So what you do is you go to Dan and say, hey, Dan, my Roth IRA would like to be able to buy an option on your real estate. What I'd like to do right now is pay you $3,000 from my Roth IRA, and in return, I want you to give my Roth IRA an option on that property to be able to buy it from you for $200,000. Now, is Dan happy with this arrangement? Sure he is, because he only wanted to receive $200,000 to begin with. Now he's going to get a little $3,000 kicker. Dan's ecstatic with the whole thing. Now, let's say for the sake of this example, let's use a large amount. Let's say the property sells for $250,000. What's the cash flow going to be? Well, Dan, he only wanted $200,000. He's happy with his $200,000, so he gets $200,000. Your Roth IRA, on the other hand, it gets anything over and above $200,000. If the property sells for $250,000, that means that $50,000 is going to drop down into your Roth IRA. How much is your Roth IRA going to have to pay in taxes on that $50,000? Nothing. How much are you going to have to pay in taxes on that $50,000? Zero. How much is anybody on the face of the earth going to have to pay in taxes on that $50,000? Zero. Nothing. Nada. Not a single penny in taxes that can be paid on this transaction just because we used a fancy tool called an option to get leverage on the investment and the return on investment for our Roth IRA account. Now, I know a lot of you listening to this are real estate investors and you probably have done a lot of options. Here's my question to you. Why would you do those in your name anymore if you had the capacity to start making those investments inside a completely and totally tax-free account? It's just common sense, guys. Why pay taxes on investment capital, investment profits that you don't need for personal living expenses and you're just going to reinvest? This is the solution for you, these self-directed IRAs. So the obvious question at this point is how? How do you set up a self-directed IRA? Because after all, if you pick up the phone and call up your broker at Merrill Lynch and say, hey, stockbroker, I would like you to cut a check for $3,000 out of my Roth IRA account to pay to Dan to buy an option on his real estate, what's your stockbroker going to tell you? They're going to tell you it can't be done, it's illegal, it's wrong, all this other stuff. Guys, don't listen to them. This is what you need to do. You need to move your IRA assets from your old custodian over to a self-directed IRA custodian. Now, there's a very large number of self-directed IRA custodians out there. If you want to know which one's the best for you, send us an email and ask for our special report on self-directed IRA custodians. We'll be more than happy to send that out to you. So what you want to do is move the assets from your old custodian over to the brand new self-directed IRA custodian. Now, whenever you want to make an investment, all you're going to have to do is pick up the phone, call them up, and say you want to make an investment. Yes, that's going to take a little bit of time to gain access to the money. Yes, you are going to have to fill out some paperwork, but at least now you can gain access to all those investments that in the past you've been blocked from getting. And it all goes back to that one phrase, it takes money to make money. A lot of us has never had access to our own money to start making more money. We've always felt like our IRA account was owned by someone else, probably the brokerage house. Now we're giving you control back over your IRA money, over your retirement plan money, so you can start making higher rates of return with that money.